Wall Street closed on a pessimistic note on Tuesday and did not clear up the US debt ceiling issue. The market is cementing the hopes for a positive outcome, but US legislators did not come up with a long-awaited decision. Apart from fears over the looming default and recession, stock investors are also discouraged by the hawkish Federal Reserve and the pessimistic retailers. On a Tuesday, investors were in the wait-and-see mood for the most day. The market closed in the red. The benchmark indexes went down in response to forecasts by retailers and retail sales data. The Dow Jones logged the steepest losses. The index tumbled by more than 300 points or 1.01%. The Nasdaq also erased all previous gains and shed 0.18% intraday. The S&P 500 sank by 0.64% to close at about 4,109 points. Judging by the dynamic in the pre-market, the major stock indexes aim to recoup losses later today. Still, the fundamental background is mixed. Amid potential risks and a fresh macroeconomic data, the S&P 500 is likely to trade in the range of 4,110 to 4,170 points until Congress settles the federal debt ceiling. Sentiment on Wall Street is spoiled by the disappointing forecast by Home Depot and US retail sales data for April. Home Depot shares dropped by 2.15%, which dragged down the Dow Jones and the S&P 500. The retailer cut its annual sales forecast and predicted a sharper-than-expected decrease in revenue. Investors judged on a consumer sentiment by the report by the U.S. Commerce Department. Retail sales rose by 0.4% in April, much lower than the expected 0.8% growth. However, core retail sales revived, excluding cars, gasoline, building materials, and takeaway food. And this and other data indicate that the U.S. economy is losing momentum following a series of rate hikes by the Federal Reserve to fight against high inflation. This slowdown, alongside the talks on raising the debt ceiling, rose speculations about when the central bank would suspend rate hikes or even begin rate cuts. On a Tuesday, investors digested viewpoints, warnings, and the hawkish statements by Fed policymakers. Richmond Fed President Thomas Parkin said that he admitted further rate hikes if necessary. Cleveland Fed President Loretta Mester said that it was too early for the central bank to put interest rates on hold. Chicago Fed President Austin Goolsbee said it was premature to discuss rate hikes, and New York President John Williams noted that inflation remained elevated. All in all, Fed policymakers were on the same page. Thus, traders are not betting anymore on the first rate hike in June, and that this likelihood was almost 20% months ago. All these important comments and economic data took the back seat on a Tuesday because investors were riveted to the burning issue, the US debt ceiling. The talks between the Joe Biden and Republican Speaker in the House Kevin McCarthy didn't end with a deal but signaled the pending agreement which would prevent the U.S. from defaulting on its debt. As for the corporate news, Horizon shares slumped by 14.17% as the Federal Trade Commission said it would file a lawsuit to block Amgen's purchase deal. Amgen shares fell by 2.42%. Capital One shares climbed by 2.05% on the next day after Berkshire Hathaway had announced that it had bought a stake in shares worth $1 billion. On Wednesday, futures on the US stock indexes gained ground because policymakers gave hope that the default in the US could be averted. Despite early optimism, market sentiment remains mixed. Another retailer added fuel to the fire. Target presented its profit forecast on a Wednesday, which was lower than a Wall Street consensus. The company also predicted a sales decrease in the second quarter because consumers avoid buying goods of a secondary importance such as home electronics and home accessories. Still, the company maintained its forecast of annual revenue for 2023 after its financial performance was beyond expectations in the first quarter. Target benefited from a steady demand for beauty products, essentials for homes, and its own brands. The Tyrrell's shares went down by 3% in the pre-market, whereas shares of a larger retailer, Walmart, slipped by 1%. The stock indexes found support from the Tesla shares, and they grew by 1.4% in light of an annual meeting of shareholders. Elon Musk refuted the rumors that he might step down as a Tesla CEO, mentioned 2 new models for the mass market under development, and confirmed the deliveries of a new model, Cybertruck, later this year. Stocks of US lenders rose in the pre-market because updated information about deposits at Western Alliance softened concern about the escalating bank crisis in the United States. Western Alliance shares jumped by 11% after the company reported that the growth of the bank's deposits exceeded $2 billion as of May 12. PacWest shares also leapt by 10%. As for the economic calendar, the market is absorbing the data on the construction sector. The U.S. Census Bureau reported that the number of building permits shrank by 1.5% to 1.416 million on a year. It's the second decline in a row and falls short of expectations of 1.437 million permits. The indicator means a low demand for homes due to the high borrowing costs and soaring inflation. Uncertainty about the US debt ceiling and the hawkish remarks from Fed's policymakers drove a rally of the US dollar after sluggish trading in the midday. Its index developed a rapid rally, having climbed by 0.35%. It rose to 102.90. The intraday Canada is defined between 102.50 and 103.20. The greenback strengthened today as a safe haven asset on the back of the default risk. Besides, traders do not anticipate that the Fed will soften monetary policy in the near future. Though Joe Biden said that any default would push the economy into a recession, investors worry that the aftermath will be disastrous on a global scale. Thus, they will seek refuge in the US dollar. And last but not least, the US dollar's rally was propped up by First Deputy Managing Director of the International Monetary Fund, Jita Kapina. She advocated for further monetary tightening by major central banks in a joint struggle against stubborn inflation. The Canadian dollar is trading mainly sideways today following a volatile session yesterday, and the USD pair inched down by 0.09% to trade at 1.3467 in the pre-market. The instrument is expected to trade in the intraday Canada between 1.3400 and 1.3490. The evidence of a growing inflation in Canada supported the intraday strength in the loonie, and the market now speculates on a new rate hikes by the Bank of Canada. Canada's CPI edged up by 4.4% year in April, following a 4.3% increase in March. It's their first inflation acceleration in the last 13 months. The analysts had projected a decline to 4.1%. To sum up, inflation is still raging, and Canada's housing sector reveals the signs of a recovery. It means that the regulator will hardly cut interest rates this year. In January, the Bank of Canada suspended its monetary tightening and left the key interest rate at 4.50%, the highest level in 15 years. Markets expected a long period of steady interest rates before rate cuts at the end of 2023, and now the market evaluated a 50% chance of another rate hike by July. The loonie benefited from a rise in oil prices, and Brent crude futures gained 1.1% to trade at $75.76 per barrel, and WTI grew by 0.9%. Bitcoin is sensitive to the US dollar's rally. The flagship crypto extended its sluggish decline today and approached $26,700. The token shed 1% without any signs of optimism. Popular cryptocurrencies are trading mixed today. Ethereum, Binance, Cardano, and Solana lost 0.3% and 1.3% intraday. Ripple and Litecoin jumped by 3% and 5% respectively. Sentiment in the crypto market was spoiled not only by the recovery of the dollar and the banking sector, but also by comparison with the casino. Bitcoin, Ethereum, and other cryptocurrencies should be regulated as gambling, given the significant risks they pose to consumers. A report released on Wednesday by a group of the UK lawmakers reads: the legislators' logic is as follows. Bitcoin and Ethereum account for 2/3 of all crypto assets and are not backed by any currency or asset, which leads to price volatility and the possibility of destroying all money invested in them. The industry agency Crypto UK responded that it does not agree to link the crypto sector to gambling. With this information background, Bitcoin finds it hard to grow. As for the intraday outlook, the token is likely to trade in the corridor between $26,700 and $27,300. A breakout of the lower border could enable Bitcoin to retest $26,200 and even $25,900. Это был взгляд на новый биржевой день в Соединенных Штатах от аналитиков группы компаний InstaForex. Наша команда желает вам торговать легко и в плюс. Всем успешных сделок и до новых встреч на канале. Увидимся завтра.